Hi everyone, I'm Devon Coombs CPA, and today I'm going to go over the starting journal entries for a business. And so this is an appendix to my other lectures where I'm going to really go over every single journal entry that you can expect to be tested on in an Accounting 101 course, and a little extra here. So if you're looking to start a business and just trying to learn accounting, or if you're in an Accounting 101 course, this is going to be a summary of all the journal entries you'll need to know through this series. Please watch my other videos for the theory of accounting. This is going to be focused on the journal entries and their financial statement impact. And so the big piece here is I want you to be looking at, when I do a journal entry, how does it impact the financial statements, what accounts am I booking, and really what is the impact to the business. And I'm going to go over that really quickly with every single major journal entry in this series. So this journal entry is funding a business by issuing stock. This is the first journal entry for our business, and I'm going to walk through funding this business and all the transactions throughout this presentation. So funding a business by issuing stock, we're talking about, let's say I'm starting a business, Coombs Inc. On December 1st, 2019, Coombs Inc., the company, authorizes and issues 1,000 common stock with a 0.01 or 1 cent par value to me in exchange for $10,000. So the key concept here is the business is separate from the individual, and we have to know that, right? So no matter if I am running the business or the sole owner of the business, I'm still a separate entity from the business, and we're just going to be assessing the business's transactions. And always keep that in mind, and I go over that more in my business law lectures as well as my accounting lectures. But so I'm funding my business with $10,000. In exchange, I'm getting stock, which gives me ownership in the business. So I'm debiting cash. Cash is an asset. It's a current asset because it's liquid. We can turn it into cash. Cash can turn into cash in less than 1 year. So it's a current asset. It's the most current of assets. In exchange, I'm funding my business, right? And so in exchange of the business getting cash, they are issuing common stock. But for accounting, for GAAP purposes, common stock is always going to be issued at par, and so that $10 is the 1 cent times the 1,000 shares. And so 1,000 shares times 1 cent is $10. The remainder goes into something called additional paid-in capital, or APIC. And so that's where we get the difference, is that the difference of the 10,000 minus the $10 gives us our APIC. This is equity, right? Equity has a credit normal balance. Assets, like cash, have a debit normal balance. And so what we do now is then check, do our debits equal our credits? And they do, right? Our debits, our assets, have a debit balance. Remember, debt and clear. Debits include assets, right? Debits include expenses, assets, and dividends, and credits include liabilities, equity, and revenue. So that's the debt and clear mnemonic we go over in my other lectures. So debits of 10,000, credits of 10,000, cash is 10,000, and our equity comes out to 10,000 as well as common stock and APIC. And so let's look at our financial statements. And so I want to remind all of you that this is the right way to look at journal entries, that I would look at the transaction itself, determine the journal entry, do the T accounts, make sure that they balance, and then see the financial statement impact. Understanding this is going to help you become an expert in accounting and an expert in business. So since we haven't impacted revenue or expenses, we haven't debited or credited those accounts, we aren't going to have an impact to our income statement. We haven't made any revenue, we haven't spent any money yet, or incurred any expenses, right? So no impact in income statement, but we'll have impact in future lectures. So let's go to the next financial statement. This is in preparation, the order of financial statements. We always prepare the income statement first. Then the statement of shareholders' equity. So the statement of shareholders' equity, all we have is common stock and APIC. We always start with our beginning balance, and we have our ending balance for the entire fiscal year. So the business started in December 1st. On December 1st, but we're going to report the whole year. There's no transactions that occurred January 1st, right? We had no financial information at that time. There was no business, so it's $0. Beginning balance. We have the issuance of the common stock information here, and then our ending balance is that issuance. So after the statement of shareholders' equity, we create the balance sheet. And so that balance sheet is just the accounting equation. I'm going to display the accounting equation here, and then in future lectures have a real balance sheet. The accounting equation here is to remind you that that's what the balance sheet is. So we have our assets. What were our assets? Well, we debited cash. We increased cash because the cash's normal balance is a debit, so we increased cash $10,000 for the business. That's equal to liabilities plus equity. We had no liabilities. We just funded our business with the equity, and so that equity was just the common shares and our APIC. So just remember that this really is what we have. Our assets is equal to what we owe and what we own. We have $10,000 in cash, and we own all of that business. That's our equity. We don't owe any money yet. We haven't funded our assets with liabilities. We didn't take out a loan. So all we have are assets and equity, which is a strong start to a business. Lastly, we have our statement of cash flows. We don't have a lot of information yet, but it's important to note that the issuance of these shares, the common shares, is a financing activity. That's because our financing activities are always going to be related to equity, long-term equity and long-term debt. And so our investing activities are going to be long-term assets. We don't have those yet, and our operating activities are going to be the short-term assets and short-term liabilities. Generally, these are just general rules. So we're going to go through creating these financial statements going forward. I hope this is helpful. I hope it gives you the big picture of the cash flows of our balance sheet, how the journal entries impact all the transactions for a business, and all of the financial reporting for a business. I'm going to continue to do these videos. If you have any questions or want any journal entries specific for this business, feel free to comment below. Thank you for watching, and have a great day. Bye.